Good afternoon, everyone. Buenas tardes. My name is Julia Figueiredo. Welcome to the Investing in Startups panel. And I'm really excited for this next panel because we have three really amazing panelists that are changing the investing scene in the communities that they are serving in the US and globally. I am the Director of Startup Banking for Latin America at Silicon Valley Bank. Silicon Valley Bank is the bank of the innovation economy. We've been working in the US for over 35 years with all startups and funds. And in Latin America, we've been present since 2012. For me, as a Brazilian, as a Latina woman, it's really exciting to see how the region has evolved over the past 4 years, actually doubling every year in VC investments to almost $5 billion in VC invested in 2019. In 15 unicorns. So it's pretty exciting to see what our fellow Latinos are doing in the region. I am also an advisor and one of the first members of Latinas in Tech. And it's a really great organization that supports, connects, and Latina women in technology. And actually was how I got my second job in the United States at Evernote. So I'm pretty thankful for the organization. I would love to thank LTX Fest for the opportunity to be here. And without further ado, I would love to invite my fellow panelists to introduce themselves. And then we're going to start with a few questions. So I'm going to start with Cheryl. Cheryl, welcome to the stage.
Thank you so much, Julia. Appreciate it. Hey, everyone. My name is Cheryl Campos. I'm a Director of Growth and Partnerships at Republic. We are an innovative fundraising platform that allows anyone to invest in startups and for startups to raise up to $1 million in capital. Hopefully, crossing my fingers, soon to be 5 million. We'll see. In terms of reach, we have about 700,000 users on our platform, and we also have helped over 150 companies raise over 50 million. So incredible growth over the past 4 years, and with certain legal changes that will only continue to accelerate. So always trying to support more founders, especially those that are traditionally overlooked by VC. 40% of our founders are women and 20% are Black and Latinx. So always excited to reach more of them and get them the capital that they need to thrive.
Awesome. Thank you. Next, Carmen.
Hi, everyone. My name is Carmen Palafox, and I'm a pre-seed and seed stage venture capitalist based in Los Angeles. With Mila Capital, we invest in tech you can touch, that's hardware, and then also with 2045 Ventures, investing in a thesis that diverse teams outperform non-diverse teams. I'm also on the founding board of LatinxVCs, and we have 3 pillars. Our primary mission is to increase representation of Latinx in the VC industry. So that's both at established VC firms and then also supporting new managers like myself. And in addition, I'm also on the board of the National Venture Capital Association. So thanks for having me.
Thank you, Carmen. Greg?
Hi, everybody. I'm Greg Bennett. I'm the Senior Associate in the investment team at Kapor Capital. Kapor Capital is an early stage venture capital fund focused on companies that close gaps of access, opportunity, and outcome for low-income communities and/or communities of color in the United States.
Thank you. So I'm going to start again with Cheryl. Cheryl, so Republic has a unique business model, and I was looking at your website and it says that I think the mission is to democratize investing. So why is that important for founders and for people like me that I probably don't have enough money to invest in a startup and want to learn how to?
Yeah, it is something that I knew nothing about. I came from the world of finance, and yet when I found out that I, as a non-accredited investor, couldn't invest in Uber in like 2008, I was shocked. The laws, which have just recently changed, generally only allowed folks that had a net worth of $1 million or income over 200K per year to really go and invest part of their assets or disposable income into startups. that is changing, thankfully, because we've also been lobbying with a lot of other players in the space. But at the same time, Republic is a regulated platform that allows folks, you know, the 97% of folks that were previously locked out of this asset class to invest. So a single mother out in Ohio can use a couple $100 of her money to invest in startups that she believes in. A lot of people actually, and most of our investor base are non-accredited, they actually like to put their money to work for companies that they're actually customers of, right? And so that's actually really good for founders, because founders in turn can actually make their customers investors, and through that, they're tied to their success. So customers will go ahead and tell their friends, family, buy them, gift the products, all of that, and really are incentivized to be aligned with the company. And so they get a return when the company exits. So they IPO or they get acquired, and they get a share kind of the returns. So I think it's really all about that power of community, the power of numbers, especially for, you know, founders that are, you know, maybe overlooked by VCs and need to rely on their community, or need to rely on anyone around the world who believes in them to give them the capital that they need at the time that they need it. So we do pre-seed all the way through Series B. And that's kind of why it works on both sides. For you, example, like if you want to start investing, you can do that with as little as $50. And then on the flip side, you can also have founders that get the capital that they need. Our average raise is about $500K.
$50, that's pretty cool. So I'm going to check out the website.
Exactly.
And how do you, just last question to finish this one, but how do you select the entrepreneurs that are on your base?
Yeah, great question. We're very curated. So we're less than 1% of startups actually get accepted. And that's kind of crazy because we just get so much cold inbound that we have to be very selective. I think it's also a responsibility to our investor base to give them the best companies. So at any given time, we have about 30 to 50 deals on our platform. And we have a, you know, sales, due diligence, investment committee process that I used to be formerly part of before I joined the partnership scene full time. But I've seen firsthand how we do our due diligence, really look for good teams, the traction that I think will be appealing to our investor base, the technology or product around it that we think might have a competitive advantage, and then the fact that, you know, whether or not they are underrepresented founder is, you know, very important to us. And, you know, if they're geographically diverse as well, because I think we have 30 out of 50 states represented, which is pretty awesome. And to that end, yeah, it's something that we want to continue because that differentiates us, you know, amongst the others. And you know that by going on the platform that these are vetted companies that you could believe in, that have their books in order, and we, you know, have the Republic stamp of approval.
That's awesome. Thank you so much. I'm going to go to Greg now. So Greg, Kapor or Kapor? How do I pronounce that so I'm not making a fool of myself?
It's Kapor, but Mitch responds to both.
Kapor. Kapor Capital also has a very interesting thesis, and you focused a lot on Latinx and African American communities. Can you tell us a little bit more about the profile of the companies and how you work with entrepreneurs that you invest in, so after the investment?
Sure. Two big questions. So in terms of companies that we look for, and like what the biggest piece of that is what does gap closing mean, right? And when you break that down, there's lots of companies that are working on things that might not necessarily close gaps for low-income communities, right? So they may be widening gaps, or they might be neutral, and that's fine. Like that's for other investors. For us, we're looking for things that are materially helping the communities that we care about in some really substantial way. So there's no like scorecard for that. There's no like framework for that, especially because, you know, the market changes, and we've been doing 100% socially impactful investments since 2011. So we look at every company case by case. We get between 1,500 and 2,000 companies pitching us every year. So
wow,
it's a lot. We're looking at a lot of companies. But that's why if you look at our portfolio page, it's so diverse in terms of sector and stage, or well now stage because we've been around for so long, but sector and business type. So we have mostly a lot of enterprise, but some consumer. And then we've got companies doing stuff in healthcare and financial services and affordable housing and HR people ops tech and food and agriculture and everything in between, justice tech. And some things we just throw into other because they kind of sit between a couple of different sectors. So we're pretty open on where these solutions that we think can really impact the communities that we care about can come from, as long as they are within they have a strong software component and they have the capability of growing at a venture scale, which, for us, back of the envelope, you could say topping out at $100 million in top line revenue within a few years, which 99.7% of companies probably could never be. And that's fine. So that's something that we talk about a lot when we're of those 2,000 pitches that we get every year, or roughly, we'll invest in 13. So we're saying no 99.9% of the time. And for those folks, a lot of times what I'll tell them is, look, there's lots of ways to finance your business. VC is just one tool in the toolkit. There's CDFI loans. There's our good friends at Republic. There's shout out Cheryl. There's angels. There's pitch competitions. There's the best way, which is getting revenue from your customers. And everything in between. So that's a long way of saying we look at lots of different types of companies, but the main piece is who benefits from what they are doing. And the people that we care about benefiting from them are low-income communities and communities of color in the United States. In terms of how we work with our companies, most VCs will say, oh, we're hands-on, we're value add, blah, blah, blah. We say that too. You have to say that, otherwise you don't get to do the deal. But for us, we like to think about it in a couple different ways. We speak a lot about our commitment to diversity and inclusion, and it's something that we've talked about very openly. If you Google us, it's probably like the first 15 hits. And so we work with our portfolio companies on building that into the institutional DNA of their company. When you're below 20 employees, it's a lot easier to get that right before you become this kind of like larger core organization, and then you become like a behemoth like an Uber or Twilio. And sometimes it works out really well with like in Twilio, and sometimes you have some culture issues like you did at Uber. We were investors in both.
Wow.
Yeah, so this was a pre 100% social impact day. But for example, for Uber, when Mitch invested at the first round with them, the pitch was, if you have a car, you have a job, which could be profoundly transformational for lots of communities that we care about. Obviously, it grew into this behemoth that did lots of other things, and we can talk about that another day. But
that deserves a whole webinar by itself.
I want to talk about that now.
Yeah, that's its own panel. But so we work a lot with our companies on helping to build culture early on in a way that's inclusive and beneficial for the human beings that work at the company. And that's everything from doing working with them on a one-on-one basis, helping them with hiring, et cetera, et cetera. So we kind of specialize in that piece a lot. And then we've got individual investors on our team that have different specialties. Like, so for example, for me, I do a lot of our sustainability investments. A lot of our sustainability companies are not just raising equity, they're also raising debt. So I've had to spin up on all sorts of different specialty financing mechanisms. And that's been really, at the very least, we can be a useful intermediary for our portfolio companies before they go to other investors. So that's a short answer of how we work with our portfolio companies. I hope I didn't go over my time.
No. And so just out of curiosity, what's the check size that you're writing to these companies?
Yeah, so for us, it's between $150,000 and $500,000. So we're not leading rounds. We're not a major player. We don't have infinity dollars like a Benchmark or Sequoia yet. So we try and play that very useful small check investor that can advocate for the founder, whether it's to the board or to customers or whoever it may be.
Yeah, So just you touched about on some ways that startups can fundraise. So just at SVB, we also have a team that lends money to startups. Even they don't need to be profitable. They're very early stage. It could be to bridge a seed to a Series A to a Series B. So venture debt is something that SVB has been doing for a while. So if you're in the audience and you need to bridge series, you can talk to my team at SVB as well. So Carmen, I'm really interested to know you were a partner on two funds in LA, and one of them only invests in diverse founders, right? So I would like to learn a little bit more. Why is it important to have a fund that invests in diverse founders, and what are you looking at in stage of company, and what are you looking at in the founders that you're talking to daily?
So the thesis is that diverse teams outperform non-diverse teams, and that's been shown through so many studies by institutions like McKinsey, BCG, that show that diverse teams outperform non-diverse teams in terms of how fast they exit and then what the return exit is. So I just want to put more data on the board to back that up. So I'll invest anywhere in any startup where there's an immigrant founder on the founding team or someone from an underrepresented group. A lot of that has to do with the fact that demographics in the US are changing. Right now we have 4 states where there isn't a racial majority, and that's just going to continue. So I'm moving towards the future.
And are you looking just in LA or all over the US or all over the globe? What's your geography?
Predominantly US, yeah.
Okay. Cool. Yeah, I can't talk much about this yet, but I'll follow up when we can. SVB is creating a fund of funds to invest in funds that are investing in diverse founders. So it's a diverse fund of funds. Yeah, so we are right now.
How's everything, Julia? Like
putting the team together to do that. So we're pretty excited, and diversity is really important for us. So I appreciate that. I'm sure we're gonna be in touch. So this next question is more like an all question, and whoever wants to take it, if 2 of you want to take it, all of you want to take it, great. So how being Latina or Latino has impacted your career, and can you or have you used this as a cultural advantage, being a Latino?
I can talk first about that, I think. So it's always been something that has made me stand out, right? I was in a banking class of 150 analysts, and I was the only Latina, right? And I also was the only minority that didn't come from one of the diversity pipelines that there are, right? Quote unquote. Like it's really interesting to see how people can easily, because you are different, demean you or belittle what you say, or like make you feel as if you're not supposed to be there. And yet I know throughout my entire life, right, especially in a household with a strong woman matriarch and like, strong role models all my life, that I do deserve to be there. I think if anything, being Latina also has helped me really embrace who I am, right? I can be as loud as I want to. I can really embrace my full self. And if people don't like that, then it's okay. We have differences, and that's totally fine. And so it's interesting because I understood myself that finance wasn't going to be a long-term thing. Finance is a lot more, traditional finance, by the way, is not going to be the thing, because it makes you be a cog in the machine. It makes you, kind of be part of this hierarchy model that, I think doesn't really work for the personality that I have. That's a lot more you know, giving is a lot more kind of entrepreneurial. I think, especially my mom, she like, you know, had different businesses. She like made sure to, you know, look out for her own. And that allowed me in turn to like have this spirit where I just try on these new things. And so that's actually how I ended up in tech, is because I saw that there was a really great connection between the traditional finance tools kit that I had prior, but then also blending it into, you know, the future, which is what tech does, right? The traditional finance, as I mentioned, is more about preserving the status quo. Tech is all about predicting the future. And so there's no better way to do that than to be at a startup that kind of straddles both worlds of VC and tech. And so that has allowed me to use my entrepreneurial spirit to try many different things, to not to be brazen about it, quite frankly, like because you're just like it's chaos, right? Being in a startup is just absolute chaos. Nothing is ever goes right, but you just have to stand up, try again, you know, fail again, try better. And that's what I've done all my life. I think being Latina has allowed me to be confident in myself, to, you know, even though I stand out, to own that, to just, you know, continue to push forward, because otherwise, you know, you're not living. And I think that's what we all want to do here, is to be our best selves, bring our full selves, and enjoy along the way.
For me, you know, I had an investor, a limited partner, tell me that being Latina was my differentiator. And, you know, I really started to lean into that when I look back at the first fund, Mila Capital. 46% of the founders that we invested in are from underrepresented groups. 56% are immigrants, and a lot of that has to do with the networks that I've built. So I look at it as a massive opportunity that most folks are just starting to become aware of. When you think about just Latinos, and you know, we represent 20% of the population, but only receive, you know, less than 2% of the venture funding. And in LA, Latinos are 46% of the population, you know, and when you think about the students that are in the University of California ecosystem, that they represent 35% of that population. So we're a powerful and knowledgeable community. And so that, you know, I see a big opportunity for return on investment by leaning in on who I am and my culture.
That's awesome. Greg, you unmuted, so.
Yeah, I'll I mean, I think for me, the way that I look at it is John Leguizamo and his Latin History for Morons special.
Love that.
Yes. Oh my gosh, what?
Talks a lot about,
I watched it live, it's amazing.
Well, yeah, he talks a lot about what does it mean to be Latino. And because if you look at us genetically, we're kind of everything. And if you look at the history of what happened, like we were colonized, all these other things. And I have even less of that, you know, I don't know if you can tell by my name, I'm a bit of a biracial angel. And I've got a little bit of camouflage because of that. And that's something that has been, you know, a piece of privilege. Thanks, Dad. So, but when I think about what being Latino means to me, it's, you know, what are the things that my mom taught me and my grandfather and grandmother taught me, and like, you know, my whole family down in Mexico taught me, and what it means to bring that to work as an investor in a weird industry that none of them really understand, which is, you know, treat people with respect, don't think you're better than anybody else, work really hard, you know, all the good things that I feel like all of us, and don't be afraid to have fun. I think that's something that most people can relate to outside of, you know, everywhere south of the Rio Grande. But it's something that I kind of hold in my heart. And so I think that I don't know if it's made me a better investor. I don't know if it's made me easier or smarter or better to work with or something like that, but it's undeniably something that I bring to work every day. So that's how.
No, that's great. Yeah, I completely agree. I think this strength, this fuerza that we have, it's amazing. Thank you guys. Thank you all for sharing that. So now I'm gonna go back to Carmen. Actually, I was gonna ask you on the first question and I forgot. I would love to know your work with NAVCA, the the National Venture Capital Association. If what are they? Do they have any initiatives on diversity? How do they see the diverse managers? If there's anything, any research, anything that if they are talking about it? Because I'm a member of LAVCA, which is the Latin America Venture Capital Association. And then I have another question for you, but.
Yeah, National Venture Capital Association has been talking about diversity since I first got in the industry in 2015. And just this year, they spun out a new nonprofit called Venture Forward to focus specifically on several different pillars. One, to create education, to really take what's venture capital is relatively new industry. So to encapsulate that and share that with the next generation. But there's also a big focus on diversity, equity, and inclusion. So right now they're actually doing a survey of the industry to see where we're at. They've done this survey, I think this will be the third survey. So I think it's still going. So if you know any VCs out there and your firms have not taken it, please do take it. But it helps to show the progress that we're making in the industry on diversity, equity, and inclusion.
Yeah, there was a recent study that I can share with you guys later of MEXCAP, the Mexican Venture Capital Association, and they were asking the funds if they have any diversity and inclusion policy, because I think the number of partners and venture partners that are women in the Mexican funds, it's like 3%. It's something like. And then 85% of the funds agree that it is important to have a diversity and inclusion policy, but 75% admitted that they haven't done anything towards that. So
yeah, I think you have to prioritize it, right? Like there's a lot of things that I think are great and that I like to see in the world, but unless I say, this is my top priority for 2020 or 2021, it's just going to fall to the wayside to what is actually my top priority for that year. So it has to be intentional and it has to be prioritized, or it just it will happen organically. But we've seen studies that have said 200 to 400 years to parity. So it happens over generations, and that just means that we're wasting human capital that's talented and ready to go.
Yeah. So the next question that I had for you too is I'm here in San Francisco Bay Area. I think Greg is also Cheryl. I think you're not, right? I think you're Miami.
New York.
New York. But Carmen is in LA, and San Francisco is the hub for startups. But after COVID, at least I've seen a lot of my personal contacts moving to LA. And also we with Silicon Valley Bank, we have an office in Santa Monica, and people and we are trying to understand more of the tech community after COVID or with COVID. I'm curious to know how's the tech community in LA, because it's historically Hollywood, right? So
it still kind of is when you think about, I lived for 7 years in Culver City, and Culver City is now the streaming capital of the world. You have Netflix, Amazon, Apple, all these content creators. You still have gaming, but in addition to that, you have amazing deep tech. So we have Caltech here, We have all the Claremont colleges. We have UC Riverside that focuses on deep tech and food and ag tech. So LA is massive. You know, there's 10 million people here, 212 languages spoken, and there's a lot of space. So I think that's what attracts people, is the fact that you can spread out and you can have all these pockets of industry that spans, you know, everything from consumer to climate tech to deep tech to food and ag. So there's a lot of variety here. And it's not, I mean, you can get in your car and drive to San Francisco, or you can drive down to the border, down to San Diego.
Great, thank you. Cheryl, I'm gonna keep the COVID theme that we can't avoid since we're still in it.
Never.
How has COVID impacted your business model, or the number of investments, or the entrepreneurs that are now on your platform or joining your platform? If you can touch a little bit on that.
It actually was great for us, which is kind of crazy. I think Silicon Valley, quote unquote, slowed down or shut down for a while. And that meant that a lot of companies had to come to us, right, or to alternative funding, right, to survive what would be a cash crunch, or, you know, something that they didn't see coming. And so that's why, yeah, we were inundated. I think we tripled our deal flow. Like, it was very, very stark. And so we were, the employees were a little bit underwater for a while. I mean, I was talking to Greg for a bit because he's a venture partner, and he probably saw how busy I was. So I feel like I've gotten a little bit more settled now, given that we now know how much we're dealing with, and also the investments on the platform. They went down for a little bit, and we were like all holding our breath, and then it went back up, and I was like, okay. Like, so it was not as bad as we thought it would be, especially because I think a lot of people are starting to feel like they want to have that financial agency, right, to take their journey into their own hands. And so they're looking into different ways to diversify their portfolios. And so Republic is a good way to do that, right, especially since it's really the only way that you can do it at a very small scale, right? And so, yeah, we rolled out some new products. We acquired 2 new companies. One of them was Fig, which is a video game development, crowd investing. That was backed by a founders fund. We had another one that was Compound. It was real estate investing. That was backed by NEA. So we had really great acquisitions that also diversify what Republic can do, because at the end of the day, the vision of Republic is to become the Amazon of private investing, that whatever you want to invest in, you can invest in through Republic. So now you can invest in video games, startups, real estate, you know, which, by the way, real estate has, you know, better returns. It's a little less risky, but you know, it's more guaranteed of a return versus startups, which, you know, 90% of them die. So high risk, high reward, and overall it's just allowed us to continue to grow our user base, and hopefully we'll reach the full 1 million by year end. So we'll see.
Yeah, cool. Greg, how has COVID impacted your investment thesis, your investments? Were you investment all throughout the first half of the year? And that's a hard question, but it's in your opinion, how would COVID impact investing, the venture industry, like forever? Because we had never seen venture partners investing in a company without meeting them in person, and now everything's online. So going back, how has it changed for you and your investment thesis and your investment on the first half of the year, and how do you think the industry as a whole is going to change?
So similar to Cheryl, when lockdown happened, everyone kind of collectively held their breath. We focused a lot more on our portfolio companies to start, because we knew our money isn't going anywhere, it's still in the bank, but our portfolio companies' customers might go somewhere, which would affect everything else. So we focused a lot on that for the first, I would say, 3 months of the pandemic. We kept seeing companies that never stopped anything, and we've still we're on track to do the same amount of investments we were going to do before COVID, so that hasn't changed at all. So I think that was really more a focus on battening the hatches for our portfolio companies was definitely number one, and then number two was, can we do deals virtually with Zoom? Like, I mean, yes. You also can get creative, especially if the entrepreneurs are in the same city as you. There's nothing wrong with going for a walk around the park to get to know somebody. So I don't think that, so as long as I looked at this much more as, put your helmet on and, get out there, it's going to be rough, but like then you better get harder. So I haven't seen a ton of change within our operations aside from being very good at Zoom now. And then in terms of what's going to change long-term, I mean, I think that what has accelerated is the original kind of true promise of the internet, which is if you have a computer in your home that you can do everything you basically need to do that you would normally do somewhere else. And I think for a long time, we were kind of on this path of being stuck in old ways of doing things, and COVID kind of shook all of us out of that. And now, I don't see us going back to, we're also still shaved monkeys, like, you know what I mean? Like, we still need to see each other. So I think we'll go back to a couple of days a week in the office just because that's nice. And I think that it's easier to do a whiteboard session in person than over Zoom. And do those kind of like unstructured, big strategic things in person. Plus, it's just nice to grab coffee with somebody like randomly instead of like scheduling it. But longer term, I'm much more concerned about like climate change stuff. But that's, again, for a different panel.
Yeah, we already have 2 panels. Sorry,
right?
Cheryl,
I'm like,
you.
continue. Let's do this.
So yeah, everyone has to adapt to the new normal and all of that. And at the bank, they created this Zoom, which is the water filter room, water cooler room that is on all day long. And I'm like, I already have so many back-to-back Zoom calls. The last thing I want to do is jump on another Zoom call. I think this question, I'm just going to throw it out there too. So like everything, and whoever wants to take a stab on it, but so life changed a lot. People are getting to be more close to nature. I, for one, moved from my small apartment to being closer to nature. My habits change. What do you think in the tech industry it's going to change? So like basically, what are you seeing now? Maybe more. Yeah, I think it fits for all of you guys. Like, I keep saying all you guys, all of you, because we have 3 girls in this panel.
One guy.
It's just a habit. But what do you think it will change in terms of industry? What are you seeing are like the industries for the future? And I know this is very futuristic, but like in what are you seeing now that you would like to invest now for like 5 years?
I think those are 2 different questions, but I mean, so obviously the ones that have done really well are, education tech. People are trying to figure out, how is it that we're going to, teach the future, which are our children and all of that in a way that's sustainable and can allow parents to, go back to work, right? Or, be able to manage their work-life balance. So that one has been a big winner. Another one obviously has just been like, virtual work, right? Like all of these different functions. A lot of B2B players have been winning in this space, especially like, through Slack integrations, all of that. And those are, and just even companies that help you focus, I think is another one. That in turn has also allowed for kind of some health tech innovations along. Obviously there's virtual, telemedicine and all of that has been really has been a winner here. But then also it's like mental health, right? Like Julia, you just said you're in back-to-back calls all the time. Same. I think this is why like I have some headaches, because sometimes it's about, just staring at a screen all day long. And you definitely need time to be close to nature. Like I'm a New York City girl, tried and true, like ride or die. And I went on vacation in Portland, Maine. Like I went hiking, guys, and like you would never have seen me do that like pre-COVID. I was not going to ever voluntarily be in the woods and like, have mosquitoes. Like it's just crazy, like, to me that people change because of how the world has been changing, and I think our mental health is just so incredibly important. And more people are starting to see it's not just like a cute side thing to invest in. It's actually something that we need. One thing I did want to point out, by the way, is that now I'm a scout for a top tier fund, which is pretty awesome, which means that I now have a pool of capital to deploy into startups that I believe in. And my thesis is in companies that improve people's lives and well-being. So in particular, I invest in femtech and silver tech. So improving the lives of women, improving the quality of life of elderly folks, because you mentioned what's going to happen in the next 5-10 years, but I'm looking at next 20-30 years, like when we're all at the senior home out here.
Yeah.
Bingo, like how is our lives going to be better that way, right? Like I want to invest in things that will help us be our best selves then. So that's kind of something I want to throw out.
And I think a lot about climate tech. I think when we were investing in Mila, we weren't impact fund, but several of our investments were in the climate tech space. And they were purely financial decisions, not anything to do with impact. And I think the lines have crossed now. I think we see several states that, Texas, for example, is a powerhouse in wind. And I think that's just going to continue. When you look at the funding from the government and where that's going, it's going into energy, climate tech, AI, quantum computing, so a lot of deep tech. And that's great because we talked about alternative funding. So when you think about other alternatives to the ones that we've already discussed, there's also SBIR and NSF grants. So a lot of non-dilutive money that's available for startups that are working on impactful technology that can improve our climate. So I think there's a lot of opportunity where I sit in LA to really lean in on some of those industries. Food and ag tech is incredibly exciting to me personally. So is climate tech. But again, I think there's a lot of cool things going on in ed tech, where you can mesh like gaming aspects of ed tech. Now that you have kids that have to be in front of a screen, it's much more entertaining to play a game than to just like sit and watch
poor
someone
kids
talk.
and poor mothers and parents that are like trying to make a 5-year-old look at a screen. I don't have kids, but it's probably a crazy thing to do.
I'll jump in. Yeah, I mean, I focus on sustainability investments here at Kapor, so I'm a little bit biased to food and ag and energy and infrastructure investments. But I mean, it was like 3 weeks ago that the sky turned orange over San Francisco, and we had a day without sunlight. And I think that it's hard to unsee that for people who stare at the future all day.
Mm-hmm.
I mean, our jobs are to predict what's going to happen next professionally. And so like when something like that happens, it's hard to unsee it. And those types of, I mean, you look at anything historically around environmental racism, it's disproportionately poor communities, the vulnerable, the sick, the extremely old, extremely young, pick your poison. Those are the people that will disproportionately bear the brunt of the horrors of climate change. And so for me, I'm really looking for companies that equalize the burdens that we are all about to bear together anyway. So that's going to be, you know, some of it's going to be really boring. Some of it's going to be direct air capture companies, like super boring, but we're going to need it along with a million other things. Because I look at it from a financial perspective, people way smarter than me have said that, you know, in order to draw down the Keeling curve, which is our CO2 parts per million measurement, in order to get it down to pre-industrial levels, which is, you know, ideal, I think. Certainly the levels that all us as shaved monkeys evolved in, to deal with, it'll cost us $3 trillion a year for the next 10 years globally, which for reference is, I think it's 30 Marshall Plans a year. So like, this is an all hands on deck situation. And and I think that the possibility for, you know, I think that there will be a climate tech billionaire in the next 60 years. I think there's probably multiple. And I think that this is the single largest opportunity for, number one, our generation and the generations that are coming after us. So I don't know if that's a little too esoteric, but that's what I'm thinking about for the 5 years and beyond.
No, I love that. And I can relate because I live in the Bay Area as well. That day that we never saw the sun, and it was actually like the first day was this like a horror movie, you know, like what is going on? And I kept looking at my watch and it's like, it says 10 a.m. and I have a picture here, 10 a.m. in San Francisco that day.
Yeah.
And then for a week, we didn't see the sun for a week. Can you imagine that? It's like out of a horror movie. I still have like 5 more questions, but we are running out of time. Maybe we should schedule another Zoom so we can talk. But so last question for all of you. What advice would you give to fellow Latinos and Latinas, Latinx that are watching us now, to if they want to be an investor, and any other thoughts that you want to add? Final thoughts.
You know, with Latinx VCs, I mentioned I'm on the advisory board founding team of that. So we're creating a series of just how to break into VC. These are conversations with venture capitalists in our community. So I encourage everyone to sign up for those and to hear different perspectives on that.
So on my end, it's actually kind of crazy. I didn't know VC even existed until I think first year of private equity, simply because I just assumed that finance was just banking, private debt, private equity, and hedge funds. Like, I didn't realize that there was a small asset class like VC that actually has such an outsized impact. But when I did learn about it, I was very methodical. I had a whole Excel sheet. I asked so many different people for coffee chats just to really kind of get my arms around it. There are several resources online, and Twitter is actually a good one. If you actually start following some of the VCs around there, there are a lot of resources that are being shared. Definitely, Carmen is part of LatinxVC, which I think is doing a great job of, spreading the word. But it is a hard industry to break into because, there's just so few seats. I would say think outside the box. If you can find your way to a startup and then you're able to, leverage that relationship from the startup to the VC. Sometimes they're able to pull out from there. Or, people just like startup experience. People like for example, for me, I'm in the middle of startup and VC. And so people like that I have the operating experience with at the same time, have that investment background. So it's all about kind of leaning into your strengths. If you are able to find something that you're passionate about, and especially people love to hire specialists, right? If there's a particular industry, I don't know, Greg, you know, it's sustainability, Carmen, it's food and ag tag and all that fun jazz. Like, just write new things and write Medium articles, start putting your thoughts out there, figure out how discoverable you can be, because then over time, people will come to you, and you want to be in a position where, you know, you put yourself out there, you did the most you can, and then if people actually want to hire you, they're able to do that for your expertise, and you know, not just because they're trying to check a box or anything like that. So that's kind of like my 2 cents, is kind of think outside the box as to what positions you might be a good step towards VC, and then also make yourself discoverable through kind of your expertise and what you are looking for, and you know, how you can add value to those VCs. Yeah, and then also, you know, follow all of us on Twitter.
Thank you. Last but not least, Greg.
I have a different answer.
Oh
Mostly,
yeah, we love that though.
I
Fight me.
I think that, like, if I think about this question, like if I could go back in time and tell a younger version of myself what to do, or like what I could tell my little cousins what to do. And what I've been telling them recently when they're like, oh, you do this funky thing, blah, 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 blah. What I tell them is go, number one, when you're in school, study the hardest thing you can, period. So if, like, it's way easier to study like physics and drop down into chemistry than to go from chemistry to physics. Or in the same way, it's easier, or it's harder to study. Like if you study engineering, it's easier to drop down into business than to go from business to engineering. Like, so do the hardest thing you can when you're young. And then from there, I think if you really want to be excellent at VC, and this is very much like a do as I say, not as I do situation, I think that I would tell people, especially if you're coming out of school, go and learn what excellence looks like in an industry that you really care about. So if you can really care about tech, like go work at a Google or an Amazon, like even if it's soul sucking and even if it's horrible, like you're going to understand how the best company in the world that does that thing operates from the inside. And then after that, you can go work, do whatever you want. But I think that's learning what excellence looks like early on in your career, I think is really, really important and undervalued. And so I would say do that. And then once you learn how to build, and then on top of learning what it looks like, if you can then build it, whether you're on the technical side or you're a product manager or in between and non-technical or a salesperson or whatever it is, if you know how to build a company or part of a company, all the VCs are going to want to recruit you because you'll then be able to understand how to pick that out and how to build that into your portfolio companies. And so I think, I'm basically saying pick the hardest path possible, but I think it ends up being rewarding on the other side.
Yeah, I don't think there's an easy path or an easy answer. I think my connection is a little spotty right now, but I'd like to thank you so much, Carmen, Greg, Cheryl. Muchas gracias, muito obrigada. Thanks, LTX Fest, and thank everyone for listening. This was a great chat, and I hope to see you guys soon.
Adios.
Everyone,
Bye.
thank you.
Ciao.
Guys.
Ciao.